Want to buy Bitcoin with your IRA? Don't waste your time on expensive IRA custodians. A strategy called a QRP is as easy as writing a check. Find out how. Text 44222 and type QRP book. That's one word. And get a free book that explains everything. Again, that's 44222 QRP book. One word. It's the easiest way to make Bitcoin and other cryptocurrencies part of your retirement. Hello, everybody. This is Buck Joffrey with the Consensus Network Weekly Crypto News. Today is October 24th, 2018. The cryptocurrency market capitalization is pretty flat still, $210 billion, as is the price of Bitcoin. Flat, 64.23 as of just now on Coinbase. The headlines for today, Bakkt announces a launch date. The CBOE meets with the SEC to discuss ETFs. That's a mouthful, right? And Goldman Sachs makes a huge investment in crypto, a crypto custodian, and Coinbase dominates the crypto world. All this and more after this from our sponsors. Now, there isn't much more exciting than cryptocurrency, but there are old-fashioned ways of creating wealth outside of Wall Street that have been used by the wealthiest families in the world for generations. And that's what my other podcast is all about. It's called Wealth Formula Podcast. Now, if you've made a lot of money in crypto and don't know what to do next, this show might actually answer a lot of those questions too. Again, it's Wealth Formula Podcast with me, Buck Joffrey. Welcome back, everyone. Today, I want to start out by talking about Bakkt. Now, Bakkt announced a launch date, and that is important news. So let's go back to what it is. So Intercontinental Exchange, the owners of the New York Stock Exchange, have announced that Bitcoin futures contracts will be physically settled daily via this new platform called Bakkt beginning on December 12, 2018. Now, we've talked about this before. The Intercontinental Exchange, huge name in this whole traditional institutional financial world. And for it to have a regulated cryptocurrency marketplace is a big deal. And I would say that this is certainly, in my view, the biggest news for Bitcoin of the year. And we've been talking about it for a while. It's not like this is new. But what we haven't been able to do is get an actual date. And that's what we have now. It's December 12th. Now, this is really the first opportunity, and what this means is that this is really the first opportunity for institutional investors to get into the crypto world with a respected known quantity like the Intercontinental Exchange. This is really important, folks. I mean, you and I, as individuals, don't make as big a deal of this, but known quantities are huge in this institutional world. And what else is important about Bakkt is this idea of physical settlement, right? And what that means is that they're futures contracts, but they actually have to buy and store Bitcoin. So actual Bitcoin has to be pulled from the overall supply in order to satisfy contracts. And that, therefore, because there'll only ever be 21 million Bitcoin in circulation, and less than that because of all of those lost over the years. But what that means is that just creates demand, overwhelming demand for Bitcoin, and that's what we're going to see. The alternative to a physically satisfied contract, which is something that's actually not taking Bitcoin into physical ownership, right? That's called a derivative, right? So a derivative is basically when things are based on prices of things, but you don't actually have to own the Bitcoin. And that is much less likely to affect a Bitcoin price. But in this case, like I said, you have actual Bitcoin being pulled from circulation, creates significant more demand. It starts on December 12th. Now, do I think this overnight is going to create Bitcoin 20,000? No, I don't. I think it's going to be a gradual process. But I think it is the beginning of a lot more to come. Speaking of a lot more to come, and speaking of institutional buyers, we've also been talking about how the Chicago Board of Options Exchange, the CBOE, has been working on this electronic trading fund, or ETF. So this week, the CBOE met again with the Securities and Exchange Commission, the SEC. See, there's a lot of letters in this, just to confuse you, right? CBOE met with the SEC to discuss the ETF that they are currently trying to get through. Now, representatives from the CBOE, SolidX, and VanEck, who are all sponsoring this electronic trading fund, met with SEC Commissioner Elad Roisman on October 9th to discuss the pending ETF. Now, the ETF application was initially rejected in March of 2017 for a variety of reasons. The most recent meeting was used by the ETF sponsors to argue that there were significant changes in circumstances since the last rejection, and therefore it merited reconsideration of the product. And so, specifically, the CBOE and friends who were trying to sponsor this thing argued a few different things. One is that there were multiple regulated derivative markets now that exist for Bitcoin, including the one from the CBOE itself, and that there was a $150 to $200 million of daily trading volume of cleared Bitcoin futures on the CME and CBOE combined. In other words, listen, a lot of jargon here, but what the point is that they're arguing that, hey, regulated derivative markets already exist and are flourishing in the space. And that argues to the point that one of the points that the SEC made when they knocked this ETF down in the first place, which was that this market was not mature. And so what by this point, showing all of these derivative markets and how they're flourishing, the sponsors are basically saying, listen, the Bitcoin market has matured as an asset. Now, the second point that they brought up was that the ETF, the electronic trading fund that they were proposing, would use only over-the-counter trading desk price. Now, over-the-counter trading are regulated strictly by the CFTC, and they're generally peer-to-peer. They follow strict regulations, and unless the actual platform itself manipulates the price, it cannot be manipulated. And again, this is important because a major component of that rejection of the ETF was that the SEC said that Bitcoin prices were easily manipulated and continue to be manipulated. And so what the ETF people are saying is, hey, we're only going to use over-the-counter, highly regulated platforms. And over-the-counter platforms are a little different. So the one that I'm aware of and have used in the past is called Genesis Global Trading. And the big thing here is the trading's just a little bit different, right? So your purchase does not necessarily affect the price of Bitcoin. Like if you're making a huge purchase, because it is, you're basically buying from somebody who's selling, and the price is sort of predetermined. You're not buying as it goes like you do on Coinbase Plus or Gemini, whatever. And so that makes it much, much more difficult to manipulate prices. The third point was a proliferation of information regarding sharing agreements. So again, transparency, right? So there is a lot more transparency in this space, and we've got a lot of different big players in this, whether that be Gemini or Coinbase and all these major, Genesis Global, all these different major platforms that can start sharing information, and that makes this area a lot more transparent and easier to regulate nefarious activity. So that was the other point. And finally, the fourth point that was made was that the share price for each share in this electronic trading fund would be $200,000, and effectively making it not a retail product. In other words, it won't be available to everyone. You're going to have to be an accredited investor and an accredited investor or an institution. A accredited investor is basically somebody who makes at least $200,000 per year, or $300,000 if you're filing jointly, or has $1 million of net worth outside of your personal residence. So you can't just have a fancy big house in California and say, I'm an accredited investor. Anyway, the point of this is old law. This is stuff that's, been around forever, but the idea is to protect consumers that are considered less sophisticated just purely because they have less money. Now, we can argue the merits of that, but that's just that's the rules, and that's what they're saying. So you can see the entire argument on the SEC website if you go there. But suffice it to say that the CBOE and team and the rest of them who are sponsoring this ETF did not mince words. They were pretty aggressive and argued their point that the SEC is being biased against digital assets. And that's why it's sort of, punting this and delaying this ETF decision-making process, which of course it is, but they're going to have to do so by March of 2019 anyway, so they won't be able to push it down for long. The next story I want to talk about is that Goldman Sachs made a huge investment in a crypto custodian. So what is a custodian anyway? Because you hear this nomenclature all the time. But basically, a custodian in this space is important because I can't remember the number, but I think it's, generally if an institution or a fund has, I believe it's $150 million of assets under management or more, it has to it can't just store its own, what it owns. If it's owning stock or whatever, they can have their own little account with their name on it. It has to be stored through a third party to prevent, any sort of, foul play, I guess. And so these custodians are a big deal. And we've announced before that Goldman Sachs was getting into the custodianship business itself. But and so that it makes this a little unusual. But Goldman Sachs emerged as the lead investor of the $58 million Series B funding round in the crypto custodian known as BitGo, which is already an established custodian. And this is a big deal because, again, it gives legitimacy to institutional investors of a custodian that deal with cryptocurrency, right? You've got Goldman Sachs stamp of approval on BitGo now. Of course, in 2019, we already know that we're going to have the likes of Fidelity, and then, now and then we'll have BitGo. BitGo already has about $2 billion of customer digital assets under management, or not under management, but in custodianship already. So they're not small, and I suspect that's why Goldman's kind of getting involved with them, and I'm guessing they probably thinking they're going to learn the business a little bit from them as part of this investment. So now, with the blessing of Goldman, BitGo, who has $2 billion of customer assets already, they are apparently targeting $1 trillion in assets for their custodianship once the institutional investors get in. If that's the case, ladies and gentlemen, and you own Bitcoin today, you are going to be a very, very happy person because, for reference, the entire cryptocurrency market is about 1/5 the size of that $1 trillion market, right? We talked about that $200 billion about today. So that if BitGo alone has $1 trillion in assets, that means the crypto market is enormous at that point. The next story is that Coinbase just again dominates the crypto world. They had a very, very big week. They launched their own US dollar coin, and that is going to be backed 1-to-1 with US dollars. Of course, this was in response, presumably, or at least, to go head-to-head with Gemini's recent US dollar peg token, which we talked about literally last week on the news. How many of these do we actually need? Well, I guess we'll find out. the interesting thing is that this is all coming on the heels of the failure of, or the apparent failure of Tether, which is continuing to be a story in of itself. I'm not going to go into a lot of detail in there as we've talked about it before, but Tether was the first U.S. dollar peg token, and it sounds like it might be unraveling, and it may not be the case that it's actually backed by the dollar, and that's why there is this space open for these others to get into the space and become the dominant pegged coin. Coinbase also this week, as I mentioned, they had a big week. They also announced that they got themselves a custodian license. So again, the goal, of course, here is to compete for all the big money coming into crypto, right? You need, as we just said a second ago, a custodian is needed. If you've got, I think, and you can correct me if I'm wrong, because I'm certainly no expert in this, but I believe it's $150 million of assets under management in your fund. You must use a custodian. And so think about it in terms of Coinbase, right? So they want people, Coinbase Plus, they want institutions to buy lots and lots of cryptocurrency from them. And so if they're going to do that, they need to make it as attractive as possible, right? You don't want to say, okay, well, you're going to buy from Coinbase, then you're going to move it over to BitGo, and then, and that kind of thing. What they're trying to do is create all-in-one solutions, again, targeting big money. And it's this, at the end of the day, everything I'm talking about here may sound like, okay, who cares, right? Who cares? But we should care if we own cryptocurrency or if we're in that market. Why? Because it's good for us little guys, because the easier it is for the big money to get into crypto, these big clunky machines with hundreds and billions of dollars to just put into the cryptocurrency market, the higher the overall crypto market capitalization goes over the next few years, and the more money we make for being good at getting in quicker than all of those clunky large players. So again, a good argument to potentially get in now. The final story I want to talk about literally just popped up this morning, which I think was really interesting. It is that Japan grants cryptocurrency, the cryptocurrency industry there, a self-regulatory status. Now, we've been talking about these institutions and these old-fashioned words and things like CFTC and SEC. And we talked about the CBOE trying to get an ETF. And I mean, listen, most people don't know all of these, who these regulatory firms are. They don't know what these products are. They don't know what the platforms are. They don't know any of this stuff. And why? Because, well, this is the stuff of old-fashioned finance, right? This is Wall Street stuff. And so the question is, does it make sense to try to fit crypto into those old standards of regulation? I think it is my opinion that it's hard. And more importantly, and not only is it hard, but it has the potential to stifle technology. Now, what we're already seeing is important projects, interesting projects, innovation moving out of the U.S. and moving into places like Indonesia, presumably Japan, other places that are allowing for greater flexibility and less onerous regulatory environments. And so what you're seeing is that these projects are moving away from the U.S. and they're even not allowing U.S. investors to get into the opportunities ahead of time. They're not opening up their pre-sales to U.S. investors, et cetera, because again, they don't want to get involved. Our system is a very, very onerous system, and whereas it certainly helps people not to become victimized, we have a situation here where we have a very, very quickly evolving marketplace and economy. Japan has been at the forefront of cryptocurrency in many ways, and I wonder if they're probably recognizing that in doing so, this may be one of the keys of them getting out of a 2-decade-long depression or recession or whatever you want to call it, stagflation. Today, Japan's financial services agency gave this cryptocurrency industry self-regulatory status. Okay, and so what that means is that they're saying, hey, we're not going to use these same standards, whatever we have in our current financial system, to try to understand, how to regulate something that we don't understand. What we're going to do is we're going to permit the Japanese Virtual Currency Exchange Association the opportunity to regulate itself, because they know what's going on. They're not going to put like 100-year-old regulations on this in something that makes it very, very difficult to navigate. One senior Japanese official was quoted as saying, "It's a very fast-moving industry, and it's better for experts to make rules in a timely manner than bureaucrats." Now, I suspect this move, on the part of Japan to make this market more nimble and less shackled by regulatory issues will certainly improve their opportunity to get a great deal of this kind of technological business and innovation in Japan. What I worry about is that we are in the U.S. not doing enough to make sure we get our share of the pie, right? I mean, I think we're, in many ways, even though a lot of the really smart people in cryptocurrency and distributed ledgers and blockchain and all these things are Americans, our system, our government, our regulatory systems, et cetera, are getting sort of in the way. And I think we need to address that. But all that said, in the big picture, again, I think it's all good news. Why? Because we have governments, in this case Japan, recognizing the importance of what's going on and what they're doing to make it quicker, more nimble, and other countries are going to see that, and they are sure to follow, and hopefully the U.S. is one of them. So we see, again, all this activity laying the groundwork for this herd of institutional money that presumably will hit in 2019. And amidst all of that great bullish news, again, Bitcoin is flat. It is flat this week. In fact, I read somewhere that it was less volatile this week than Amazon. Now, anyway, don't ask me why. I'm not a trader. But I do see an opportunity when I see one, and it's called buying Bitcoin right now before the big dogs get in the game. That's not financial advice. That is my opinion. So definitely check that out. And I should point out that, as you'll see in an upcoming podcast interview, there are some people who still think that, we have some space on the downside here, that, just because we've been around 6,500 between probably about 6,300 and 6,600, for weeks and weeks and weeks. And that's not normal for Bitcoin usually, right? We see usually that volatility with the minutes. But even despite that, there are some people out there who think that for trading reasons, technical trading reasons, that there could be a big stumble in this market before it goes back up and before we have another Bitcoin bull market, which, hey, I don't know. Maybe it's true, but the reality is if Bitcoin goes to $1,000 before it goes to $500,000, I'm still bullish. I think the way to approach this is the way we're doing it right now, which is to understand that this thing that we're talking about is real, that it is an opportunity potentially of a lifetime. And if you want to get involved, now's the time to do it. Let me remind you, by the way, if you want to figure out how to start getting into this stuff, go to consensusnetwork.io, and we have a bunch of tutorials on there that'll be really helpful. Again, that's consensusnetwork.io. And also let me remind you to email your questions to me so that I can answer them on an upcoming show. I don't do those on these news segments, but I do them on the other podcasts of the week, generally that are following interviews, etc. So if you want to email me a question, certainly do that at by emailing info@consensusnetwork.io or go to consensusnetwork.io and leave me a voicemail. That's what I prefer, although it sounds like so far people have not really wanted to have their voices revealed on Consensus Network, which is fine. But anyway, that is it for me this week on the Consensus Network Weekly Crypto News. This is Buck Joffrey signing off.